Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far 8 problems I have completed on preparing the manufacturing account. So if you want the complete command on this topic of financial statement of a manufacturing account, watch the videos from beginning till end. Don't skip in between and keep watching the rhythm. That means one video after another video. If you join in between, you may not be able to understand. And I suggest to you, first of all, to watch the theory videos. Be acquainted how to make the financial statement of a manufacturer. Then you can proceed easily. And now I'm going to start the 9th problem. But before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the complete 9th problem. Then I'll explain each and every point in detail. Now I'm reading out the 9th problem. See carefully. Sam, a manufacturer, provided the following information for the year ended 31st December 2017. Carriage inward. There are 2 types of carriages. Carriage inward and carriage outward. Carriage inward is the transportation expenses on purchasing the material. So carriage inward will be added to purchase of material under prime cost. And carriage outward, these are the transportation expenses on selling the goods. It will come under income statement. So always keep a pen ready. Whenever I explain you about a particular point, immediately write it down so that you can be able to remember. Otherwise, you'll forget it. So carriage inward will be added to purchase of material, and carriage outward will be taken under income statement under expenses. Direct expenses, that is a part of prime cost. Direct material, direct wages and direct expenses combined together constitutes prime cost. Then factory, direct factory wages. These are the direct wages. Then factory machinery. Cost is given, accumulated depreciation is given. Actually, cost of factory machinery and accumulated depreciation will go to statement of financial position. But here we are not making statement of financial position. We are making only manufacturing account and income statement. But why this item is given? To calculate depreciation. In the last adjustment, it will be given to calculate depreciation. That's why we need the cost of machinery and accumulated depreciation. Factory supervisor's salary. This is indirect factory expenses that will come under manufacturing account. Insurance. If nothing is given, we can assume insurance is incurred in the factory, so we would have taken under factory. But we'll see how to bifurcate the insurance between manufacturing account and income statement. Inventory at 1st January 2017, beginning of the year. Opening inventory of raw material, opening inventory of work in progress, and opening inventory of finished goods. All the 3 inventories beginning of the year given. Office equipment cost, accumulated depreciation. So we have 2 assets, 2 non-current assets. One non-current asset is factory machinery. Second non-current asset is office equipment. So we have to calculate depreciation on factory machinery and also depreciation on office equipment. Depreciation on factory machinery will go in manufacturing account under factory indirect expenses, and depreciation on office equipment will be taken under income statement. Then office and general expenses, definitely it will be taken under income statement, because anything related to factory will be taken in manufacturing account. Anything related to administration and office will be taken in income statement. Now, purchase of raw material will take it in manufacturing account. Then rent and rates. We'll see how to bifurcate rent and rates between manufacturing account and income statement. Revenue means sales. This revenue will be taken in the income statement. Additional information. At 31st December 2017, end of the year, rent and rates prepaid. So at the end of the year, some other receivables, other payables are there. So other receivables or other payable, this prepaid is other receivable. This rent and rates prepaid is other receivable. So this rent and rate prepaid should be deducted from rent and rates paid. How much are the rent and rates paid? 1,20,000. You can see here, rent and rates paid 1,20,000. From that 1,20,000, deduct prepaid. How much is the prepaid? 25,000. So 1,20,000 minus 25,000, you will get 95,000 is the rent and rates. Similarly, insurance owing. Owing means accrued, payable, other payable. So this insurance owing will be added to insurance paid. How much is the insurance paid? On the top it is given 24,000. So 24,000 insurance amount already paid and 2,000 rupees outstanding owing. So this 2,000 will be added to 24,000, right? The total insurance will be 26,000. Then inventory, end of the year. At the end of the year, closing inventory of raw materials 75,000, work in progress 98,000, finished goods 235. Insurance and rent and rates are apportioned 80% to the factory and 20% to the office. So in working note, we have to bifurcate. 80% should be taken in factory, that is manufacturing account. 20% will be taken in office, that is income statement. So in working note, I have shown here. Insurance paid. Insurance paid is 24,000 and insurance owing payable is 2,000. So 24 plus 2, 26,000 is the total insurance for the year. 80% factory. So factory 26,000 into 80 by 100, 20,800. Similarly, 26,000 into 20 by 100, 20%, 5,200 will go to office. We are making manufacturing account and we are making income statement. So in manufacturing account, factory insurance 20,800. In income statement, we'll take office insurance 5,200. That's all. Similarly, for rent and rates paid, it is given rent and rates paid are 1,20,000. So I am taking 1,20,000 rent and rate. Prepaid rent and rates, advance paid, deduct. It is not related to the current year. So deduct 25,000, 95,000 is the total rent and rates. Out of that rent and rates, 80% belongs to manufacturing and 20% office given in the problem. So 80%, 95,000 into 80 by 100, 76,000 goes to factory. And office, 95,000 into 20 by 100, 19,000 will be taken in income statement, office rent and rates. That's it. Non-current assets are depreciated 10% per annum using reducing balance method. Non-current assets are two, factory machinery and office equipment. Depreciation 10% on reducing balance method. Now see here carefully. First we calculate depreciation on factory machinery. So depreciation 10% on RBM, reducing balance method. For calculating depreciation, we need net assets. What is net assets? Written down value we require, carrying value we require. So carrying value is cost minus accumulated depreciation. So what is the cost of factory machinery? 1,80,000. Accumulated depreciation 48,780. So 1,80,000 minus 48,780. 1,31,220 is the carrying value. On that carrying value, 10% is the depreciation. So 131,220 into 10 by 100, 13,122. 13,122 is the depreciation on factory machinery. So that will be taken in manufacturing account. This is the manufacturing account. So depreciation on factory machinery 13,122. How we got 13,122? Here I have explained. Similarly, depreciation on office equipment. Again 10% reducing balance. So what is the cost of office equipment? 30,000. and accumulated depreciation 8,120. So 30,000 minus 8,120 carrying value is 21,870. 10% of 21,870. So 21,870 into 10 by 100. 2,187 is the depreciation on office equipment. This will be taken under income statement. This is the income statement. Depreciation charges 2,187 from here only. That's it. Now, prepare the manufacturing account for the year ended 31st December 2017. First question, it is asking you to prepare the manufacturing account. Here it is. SAM, manufacturing account for the year ended 31st December 2017. 2 columns, raw material consumed. We'll take opening inventory of raw material, 68,000 given in the problem. To this we add purchase of raw material, 4,50,000. We add carriage inward, that is 15,000. That's all. Take the total of these three, 5,33,000 minus closing inventory of raw material. Closing inventory of raw material 75,000 given in the last paragraph. Deduct 4,58,000 is the raw material consumed. To this we add direct wages and direct expenses. So direct factory wages are 1,47,500 given and direct expenses are given 33,950. It is given in the problem. Take the total of these three, 6,39,450 is the prime cost. We got the prime cost. Now to prime cost we add manufacturing overhead or factory indirect expenses. We can call it as manufacturing overhead or we can call it as factory indirect expenses or simply overhead. First one, depreciation on factory machinery, 13,122. It is not given in the problem. We have calculated here 13,122. Just now I have explained how we calculate depreciation on factory machinery. Secondly, factory supervisor salary, directly we have taken. It is given in the problem. Then insurance. For insurance in working note, I have explained how much should be taken in factory. Factory is 20,800. 20,800. Rent and rates, again in working note I have explained rent and rates, 76,000 is the factory. 76,000 goes to factory, here 76,000. Take the total of these four, 169,922. Add opening inventory of work in progress, WIP, opening stock of WIP, 85,278. Given, add up, 255,200 minus closing WIP, closing inventory of WIP, 98,000. Subtract, we'll get 157,200. These are the manufacturing overhead. Now you add up 639,450 plus 157,200, 7,96,650. This is the production cost. So you have completed one account, that is manufacturing account. Now B question, it is asking you prepare the income statement for the year ended. After completing manufacturing account, we'll start the income statement. Income statement for the year ended 31st December. First we begin with revenue. How much is the sales revenue given? 17,87,500. 17,87,500 is the revenue. From revenue we subtract cost of sales. Under cost of sales we take opening inventory of finished goods. So opening inventory of finished goods 1,25,000 given. To this we add production cost, what we got from manufacturing account. Here 796,650. Add up both 921,650. From this subtract closing inventory of finished goods. Closing inventory of finished goods 2,35,000. Subtract, we'll get cost of sales. How much is the cost of sales? 6,86,650. Now revenue minus cost of sales, we'll get gross profit. So revenue minus cost of sales, will get the gross profit 11,850. From 11,850 deduct the expenses. The expenses are carriage outward. I told you earlier, carriage inward should be added to purchase of material and carriage outward is an indirect office expenses. So carriage outward 27,500. Depreciation charge. Depreciation on office equipment. So here in working note I have calculated depreciation on office equipment. It is 2187. Just now I have explained 2187. Then comes office and general expenses. Directly we will take the total amount 219,450. Insurance and rent and rates. These two I have calculated in working note. Insurance of office is 5,200 and rent and rates of office is 19,000. So 5,200 and 19,000. 5,200 and 19,000. Take the total of these 5 items, we will get 273,337. These are the expenses. Deduct the expenses from gross profit. Gross profit minus expense 827,513. This is the profit for the year. The manufacturing account is prepared to find out the production cost. And income statement is prepared to find out the profit for the year. That's it. So we have completed A bit and B bit. Now last C bit. Explain the difference between inventory of raw material, work in progress and finished goods. Every now and then they are asking this theory question regarding explanation of these differences between these 3 types of inventories. Already I explained the last videos also. Again I am repeating. Raw material stock is the stock of crude material or unprocessed material which has to be converted into saleable goods. That means it is in the raw form, crude form, unprocessed material which are lying in the stores before manufacturing process gets started. That is called raw material. Then work in progress are those goods on which the manufacturing process is started but it is not completed. Manufacturing process is not completed. Still work is going on. So work in progress are called semi-finished goods, partly completed and partly not completed. So this work in progress material will not be taken in stock of raw material and will not be taken in stock of finished goods. It is in between. Then comes finished goods. Finished goods are those material on which processing is 100% completed. Manufacturing process is completed and the goods are ready for sale. Goods are ready for sale. That is called finished goods. So I have completed 9th problem in this video. Inshallah, we'll continue the next problem in the next video.